All right, I certainly want to circle back to all of the uncertainty you're predicting and forecasting in your book. But before I get to that, as mentioned, Russia has been buying gold, and Russia's central bank made a surprise move by fixing the price of gold to the ruble, 5,000 rubles to a gram of gold. It's now made the ruble one of the best performing currencies this year. What do you think of that move?
Well, I mean, any citizen looks at the value of their currency as sort of almost like their stock price, the value of their country in a way. When it's declining, people feel gloomy and they hide from it. And so I can see why that can be a confidence boosting measure at a time when there's an awful lot of uncertainty for the Russian people. Now, it also means that, at a certain point, it may be necessary to truly defend that peg. And we know that there have been many times in history where it's proven impossible to defend a gold peg because the fundamentals aren't there. So, I mean, in the end, your fundamentals have to line up with that. And if gold is not a perfect inflation hedge, having a gold standard is not a perfect tool for making sure your economy is well balanced. And in particular, we faced whatever people call the fourth industrial revolution, the major uptick in deployment of technology has just begun. During a period like that, where we know the big depressions in history happened, was when we had big industrial revolutions combined with the gold standard. So we need to be wary of these kinds of, what is old is new again kind of ideas. They've performed very, very badly in certain historical episodes, and one which I think we're about to replicate.
Well, I certainly want to focus on that. But for now, let's just keep the conversation on Russia and Russia's invasion of Ukraine. I know your father is of Ukrainian descent.
Yes.
Well, we have had some developments regarding the conflict. The European Union has now agreed on a partial ban on Russian oil imports starting immediately, which is going to cover more than 2/3 of oil imports from Russia. And it's part of the 6 sanctions package, which includes other hard-hitting measures like de-swifting the largest Russian bank. The EU has agreed to ban 90% of Russian oil imports by the end of the year. And of course, we saw Brent crude futures soaring on that news. Meanwhile, President Biden has said that the United States will not send long-range rocket systems to Ukraine. There were reports that the administration was leaning towards sending advanced long-range rocket systems, but then there was concern that this could escalate the conflict if they do, in fact, hit Russia. Others say that that is what's needed to actually put an end to this rather than prolonging the conflict. Stephen, we're now 100 days plus since Russia's invasion of Ukraine. How do you see this playing out?
Well, that's a crackerjack question, isn't it, Michelle? But I think this trend towards isolation of Russia is one that has many awkwardnesses along the way, but the direction of travel is quite clear. So I think that can only get worse through time. And that means we need to recalibrate how a lot of things work in the world. For example, we may be facing, very long-term high oil prices, a recalibration of the energy security picture during the energy transition. We're seeing that happening now. No, none of these sort of flippant, we're just going to stop using all that kind of comments, more about here's a plan where we continue to use this. We put carbon capture in place so we can still use it, and we invest heavily in green energy. Those kinds of programs, I think, is where we'll see. And a degree of de-risking of international trade, right? Supply chains, whether they involve Russia or not. Just the whole idea of being so exposed to international geopolitical developments, people have learned that they need to find ways to manage those risks better. So a lot of things that are moving as a result of this, and many of them arguably would mean slower economic growth and higher prices. So, in other
Right.
words, there's a stagflationary summary to all of that, which we talked earlier about. I think that most of these things I've just mentioned will add to that sense of persistence in the stagflation scenario.
I want to unpack something that you said there, and you used the term flippant in the move to decarbonize.
Yeah.
Is that to say that you think it's been too aggressive, too unrealistic, and you certainly still see a big role for carbon and fossil fuels in the energy of the future? Can you elaborate on that?
Yeah, so flippant is maybe a little pejorative, but what I mean is more abstract, not really, theoretical. Well, we're just going to do this, that, and the other thing, and let's not worry too much about how. And I think if you just do some arithmetic around energy use, I mean, the world has a demand for energy today. There are still 3 billion people that burn little bits of wood or animal dung to cook their dinner. It's pretty arrogant of many of us to say, well, we're just going to start switching to electricity somehow. And I don't know what's going to happen to those folks. Well, there are demand for energy. The energy, food, and water it's the tripod of existence. And so human development will continue, I believe. And that means 50 or 60% more energy will be needed by 2050. Now, if we manage all of that increase just in green forms, that will be a huge societal accomplishment. But that will leave around half of our energy needs in the world relying on hydrocarbons, conventional energy sources. And so the only way to get to 2050, and the way we hope, is to combine that with aggressive carbon capture and storage solutions. We have the technology to do this. I often hear that they're uneconomic, but I think they're not uneconomic when compared to Armageddon. So we need to sort that out, and I believe we will. So I do think that in 2050 we'll still be, Canada in particular, the United States also, can still be major global leaders in conventional energy delivery, both gas and oil, but we'll be combining that with the technologies to make it safe for the planet.
So if I may summarize what you're saying, that just to make sure I've grasped the point here, you do see carbon playing a role in the energy of the future. You do see the slowdown of this trend to decarbonize, but that ultimately what will help the climate is advancement in technologies of carbon capturing.
That's correct.
All right. That's a very interesting conversation there, especially for those that see the carbon credit market as the next thing to boom. What are your thoughts there?
Yeah, so a well-functioning carbon credit market is just a way of allocating the pluses and the minuses. So there will be people in the economy who achieve, net negative carbon solutions, and should get rewarded for that, and can be rewarded by those who can only still achieve net positive carbon solutions, right? Solutions that still generate emissions. Like if they reach the limits of their technology and can no longer reduce further. That's air travel, for example. That could take a whole generation before we're flying around in planes that do not have emissions. Maybe 2 generations. I really don't know. But if we agree as a society, that can go on as long as there are enough negative carbon solutions in the picture. And it is the carbon credit market which will help us do the accounting of that. Provided that, of course, I know that we spend incredible amount of resources today on the numbers that we report every quarter, the financial numbers, and every firm reports, completely checked up and down by their accounting firm. Well, I can tell you that will look exactly the same on the carbon side. You'll have clear, transparent systems. You'll have auditors that are professional to check it all. It'll be just as much commitment to that as you do today for the financial numbers. And with that kind of setting, a carbon market can operate very efficiently to reallocate who does what. So I'm confident that will happen, yes.
Yeah, well, we've had several guests on this show that have speculated that the voluntary carbon credit market is going to be the next giant sector to really boom and explode, and that we are going to see voluntary carbon credit exchanges and ways for investors to tap into that. And I'm understanding that you're thinking that overall you do concur with that.
I do, but depends on what they mean by explode. Because I think the activity, yes, will explode. But usually, when an investor puts that idea out, what they have in mind is that they're going to make a ton of money while it explodes. And I think it's not the sort of thing where the price of carbon will go to thousands of dollars. I don't think anything like that is necessary for us to clear the global carbon market.
Okay.
But that, of course, this is highly speculative for me to say even that. But I do think it's as in terms of its pervasiveness and its legitimacy. Yes, it
Okay.
will explode, and we'll need the collaboration of our accounting firms to make it so, because you can make this stuff up too easily, right? It has to be verifiable with the same level of rigor as we attach to the financial numbers that we put out every quarter.
Become a carbon credit accountant as a future career move. I get that. All right.
I agree.
But we did bring up this topic in reference to Russia's invasion of Ukraine and what that's meant for the energy markets. I do want to go back to the idea of how you see this playing out, though, politically. I get the market ramifications, but we're at a point now where, as I say, we're 100 days into this conflict. Do you see some kind of diplomatic off-ramp for President Putin here? Do you see some kind of diplomatic concessions of some territory being ceded to Russia? Do you see this escalating into a more intensified conflict? If you were to just prognosticate here, how do you see this conflict in the next 100 days?
Well, you're really pushing me to the wall there, Michelle. And it's such a complicated thing. I rely on Ian Bremmer for all of my deep insights on these things. So, but my guess is some sort of standoff that could last a really long time. Maybe, unfortunately, what we're headed for, and that might be the best that we can hope for from the Western side of things. I don't really know, but right now, I know that sounds like a hedge, and I guess it is. I really think there's so many possible routes forward, but you walk through like Ian does and kind of like, well, that can't happen or that won't happen. Next thing you know, you're left with, well, more of this, perhaps. I don't really know.
All right.
It's truly unfortunate. It's absolutely tragic that this can happen in today's world. I never would have guessed it. Yes, my family's from Ukraine. That's very far in our past, but even so, it doesn't matter where I'm from. I just can't believe that this can happen in any major country in the world.
Right. Yeah, certainly a very tragic event on the global stage. And whilst I'm trying to get you to give me some kind of answer here, I fully understand that it's a very difficult thing to forecast. A lot of uncertainty there. And speaking of uncertainty, let's talk about your book. I promised we would get there. And you discuss the issues that are causing uncertainty, if I may summarize: aging demographics, technological innovations, growing inequality, rising debt, and climate change. And you've said that whenever these forces interact together, they tend to cause a very big economic and financial events like the Victorian Depression or the Great Depression. And you've said that, once again, they're all acting at the same time. So what does that mean? What can we expect from the unexpected?
Yeah. Well, you've named the five forces. Usually when economists do their analysis with their models, they think of the economy as kind of a bobblehead doll, that's wobbling around. But if you wait long enough, it'll settle down, and that's your long-term outlook. Economists usually assume these things are constant, but actually, this is the biggest move in demographics that we've seen since the early 1970s. Oh, there I've said the 1970s word, So that's an important reference point, because for the past 50 years, we've been in a high labor force participation phase that is coming to an end. So slower global economic growth, lower real interest rates. Okay, combine that with the level of debt we're taking into these things. After the pandemic, the level of debt is higher actually than it was after World War II. Now, I mean, we are really in a position where something has got to give. So the idea is that these forces are actually very active, and the fourth industrial revolution is the most important mover. And so that thing is going to cause all the 15% or more of the global workforce will be dislocated by digitalization and artificial intelligence. This is a really major event for us, and at a time where the labor force will actually be shrinking. So think about the stresses that companies will be seeing. A big shift in market power from companies to employees is underway. We're going to see that's going to last for 10 years. Inequality is giving rise to the political things you see: populism, all this kind of discontent, divisive politics, the inability to decide things. What I've hypothesized is that when these things combine, it's essentially unmodelable in the sense of economists. You think, well, we'll just have all these things and put them in our model. But actually, they're not modelable, and their interactions are for sure not modelable. They interact and magnify each other. And so that's where I appeal to the mathematics of chaos. The result from systems with nonlinearities in them, complex systems, are chaos, much like turbulence in an airplane for no explained reason, or a major earthquake in California. Well, we always knew one might come, but then suddenly it does come. And so these are the kinds of economic events that are peppered through our history, and we think they're never going to happen. We call them black swans sometimes. I think this is a deeper understanding of what a black swan really is. It's an interaction between things that are actually there, but completely inexplicable, like the weather or the butterfly effect that people appeal to. So that means a lot more uncertainty in the future than what we've become used to, and policymakers are ill-equipped to manage it. So ordinary people like you or me or your company will need to deal with the uncertainty themselves. And that means a lot more people doing risk management, a lot more investment in tools that allow you to risk management, and indeed to manage risk down and convert risk to value. That's what I think companies that succeed will be doing.
So the individual corporations and the individuals cannot rely on governments to effectively manage all of these uncertain events?
No, you'd be inclined to think that, but central banks will have almost no room to maneuver in a continued low interest rate environment once we get past this, episode with inflation. And governments are heavily indebted, and the fiscal drag coming from an aging population will make that even worse going forward. So I think, given they did such a great job during the pandemic, people might be comforted. Oh, if there's a big event 5 years from now, I'm sure they'll fix it up. And I'm not sure they'll be able to, because the stresses on fiscal policy will be huge. So in the end, I think people are going to try to de-risk their own setting. They're not going to buy the biggest house that the bank will let them buy. They're going to leave a financial buffer there. They're going to carry more savings. They're going to be prepared to lose their job more often. They're always going to be keeping their contacts ready to get a next job. Companies will do everything they can to retain people, because they'll be facing all this volatility and they'll have a shortage of workers. So this is a whole different evolution in a riskier environment. Different mechanisms will emerge that help protect people from risk. But it won't protect it. We'll have to still manage it.
Well, Stephen, you're painting a very positive picture of individuals saving more and not taking out the biggest loan to buy the biggest house. Very responsible consumers that you're hopeful we'll see in the future. I can see how companies may take a more proactive approach in managing risk. Hopefully you're right on how individuals handle this as well. But would you say that the aging demographics and the lack of workforce, is that not negated by the technological advancements of automation? Does that not balance each other out on some level?
No, because people are not homogeneous and transferable. So the stresses are quite different. So we'll have a much slower growth in the workforce globally. It means that countries like the United States and Canada will come to this realization, other countries too, and they'll begin to compete for the world's immigrants. Whereas, today Canada is a big immigration destination. We're out in front of this one. So I think that's great. is a perfect time to be like that. I think, though, we'll face competition for those workers from other countries that will come to this realization. But meanwhile, the technological change is one. What we have to bear in mind that technological change is always a major positive, even though it's disruptive. It's a huge positive. It will bring much more capacity to our economies. And so just as it has the last three industrial revolutions, like electrification or something like that. And so if it's managed well, then I think we can all adapt relatively quickly, quicker than we did for the past three industrial revolutions. So a different kind of problem, not offsetting at all. I think in the end, we'll all be doing different things, and I think our companies will really want to help us get there, as opposed to laying us off and looking for someone else in a new tech way. They'll help you bridge because there won't be anybody for them to find.
So when all of these forces collide, these 5 risk factors collide in, say, a decade's time, what does that look like for the global economy, broadly speaking?
So this is the most important part of that question is to say, let's stop trying to predict what will happen, but rather prepare. So in other words, the notion of a bell curve distribution around the most likely scenario for an economy will be passé. And so companies and individuals alike will realize there's a wide dispersion of things that could happen, and you'd want to be prepared for any of those in there. So that's what risk management will look like. Thinking through, well, what if I lose my job and my spouse loses their job too? Oh, well, in that case, we'd be really cooked. Well, we need this much savings because on average it lasts 6 months. You kind of have that kind of preparation at the household level, and companies for sure doing a lot more scenario planning, like in real time, rather than throwing that at their board of directors, their best case scenario, and the board stress testing it and falling in love with the base case, which is normally what happens in a boardroom. I think there'll be much more, okay, well, let's look at the 12 things spanning this whole set that could occur to us. How will we react to each of those? How will we capitalize on them? And one last thing, bear in mind that in history's been volatile, but volatility has both good luck and bad luck in it. And actually, we know that good luck has outweighed bad luck historically by a lot. And so you have to be prepared to capitalize, not just to defend yourself, but to capitalize on what occurs. So economics, I think, might get rewritten as well, because economics is based primarily on that kind of notion of the most likely outcome. So we'll have to ask economists different questions, not will there be a recession? Rather, should I be prepared for a recession?
Okay. I like the fact that you say that good luck has a higher incidence than bad luck. That's very positive. Okay. You'll have to explain the statistics there for me some other time. But let's talk about how investors can brace for this. I know you're saying be prepared, expect the unexpected. Granted, there's always this uncertainty. Is there anything that our viewers watching this right now could take away in terms of some actionable advice?
Well, there are a couple of things, I guess. One would be that I think that investing in equities will be, as in the past, our main vehicle. But index investing is probably run its course. I think it will be a stock pickers kind of environment, one in which you'll have to know not just the earnings and what the company's actually plan is, but more about how do they manage risk? How resilient are they? How able are they to pounce on a good opportunity? Those kinds of things. So I think stock picking will become more the thing, like it was perhaps when I was a kid. And in between, we've been a bunch of indexers, and I think that's not going to be the way. So that's one takeaway, I think. Another is, for sure, as you mentioned earlier, to make sure you're building inflation insurance into that portfolio, because inflation accidents can happen, like we're living in one right now. And I believe it'll be temporary, but let's look a little farther ahead. Another one would be that the fixed income for sure is going to be highly volatile because interest rates will be more volatile. And so a different strategy than just, picking some 10 years and keeping them in your portfolios, you're like laddering and so on will have to become part of your normal course of investing. So those are kind of like old ideas. I think old will become new again.
All right. But speaking of new, in this age of digitization, where do you see cryptocurrencies fitting in? I know you were quite ahead of the curve in discussing central bank digital currencies, particularly with regards to the Bank of Canada. Do you see that as an inevitability? Do you see central bank digital currencies becoming the norm?
I do. I think people will want to use a digital money out of their wallet, their phone, their smart card, or have a chip inserted into their wrist. However, the mechanism works. They will want to use this, and it's the central bank's responsibility to provide people with the means of payment that they prefer to use. And I think that may still include banknotes as we know them today. But the central bank digital currency will just be a complete replica of a banknote. It will behave exactly like a banknote and be, of course, fast payments mechanisms, which there are an important dimension to other fintech. That's coming for sure. So we'll have real-time settlement as a routine thing. But I think that cryptos, as the class that you described them, will be relegated to some sort of asset class that some people may want to have some room for in their portfolios. I won't be one of them, I don't think, but that's okay. I think that there's a reason for these things, and so there is some attraction, and they'll be basically speculative vehicles.
All right. Well, you seem to be consistent in your position then when you said back in 2018 that Bitcoin and cryptocurrencies at large are more akin to gambling than an actual investment. Do you still maintain that position? It sounds like you do, that you do see them as purely speculative assets.
Yes, pretty well. I mean, I wouldn't want to have that same broad brush for everyone you could name. But since you mentioned Bitcoin, yes, I do think this has zero intrinsic value. If I was to start a company up today and offer to sell you stock in it and promise never to make any earnings, never to have any jobs, no employees whatsoever, no office, nothing at all, would you buy that stock, Michelle? I doubt it, but I would say it's going to go up because I'm only going to issue this many shares. I just don't think it's much of a value proposition. And so I wouldn't be an investor there. But I'd rather go to the casino because they'll give me free drinks while I gamble. But I understand the motivation behind this. So I think some of these things will, like Bitcoin, may survive as a little residual asset that people will play in, and it could go on big runs every once in a while, like it has, both directions. I don't know. There's no fundamentals to describe it. Therefore, I won't be in it.
The Bitcoin believers and maximalists would argue that one of the cases for Bitcoin is to push back against central banks and to push back against excessive money printing and devaluation of fiat currencies, and that you have something with a finite supply, and many predict that this could become some new financial standard, and that eventually we will see central banks buying Bitcoin reserves.
Right.
Something tells me you do not agree with that prediction.
I do not agree with that prediction, and I'll just give you only one piece of concrete evidence to counter it, and that is the way a monetary system based on Bitcoin would behave would be virtually identical to a gold standard, and we already talked about the gold standard. Gold standard combined with the technological progress that we're about to see is a promise of deflation, not inflation. And that deflation interacts with outstanding debts in the economy to give us all the ingredients of a depression. And it's how we would explain past depressions. And it also explains how to avoid future ones. And that is not to adopt a standard like you've described. You need a standard that has some ability to adapt to the situation. So when the economy takes off because of technological progress, like what happened during the computer chip revolution, Chair Greenspan kept interest rates low for far longer than anybody said it could. Inflation was it's gonna erupt, and inflation never went up. And why? It was because of the technological progress that was being made. And so that, of course, would have been seen completely as irresponsible policymaking by those who are advocates of Bitcoin, but also, avoided a deflation in the economy. So yes, there were side effects. We think we can manage those nowadays. The financial crisis was a side effect.
On the idea of central bank digital currencies, you said that there is a demand for easier ways of payment, but you could argue that it's already there, that I don't need the central bank to digitize the currency when I've already got Apple Pay and commercial banks taking care of that for me. Why is there a need to bring in an overseeing body into all of this? And does it threaten the role of commercial banks? No, it does not threaten a commercial bank at all. And if you have a central bank digital currency which mimics banknotes don't threaten commercial banks. So there's no reason why a central bank digital currency will threaten a commercial bank at all. Well, you could cut out the middleman if I'm just going straight to the Fed. Well, if it's all digital.
But if I give somebody a $20 tip in cash, I'm cutting out a middleman there, right? That's what cash does. Cash does exactly that.
So why the need to eliminate that then?
So any transaction that runs through the financial system goes through moments in time when it could be interrupted. Power could go off, or a bank could fail, or something. Cash eliminates that tiny, tiny residual uncertainty. Therefore, it's final. If I give you $20, that's it. We're done. You've got your $20 and I'm $20 less. That's exactly, by the way, what Bitcoin promises through the distributed ledger, that exact finality of transactions. So in that way, cash does what Bitcoin purports to do, but of course, much more slowly. In the end, though, central banks, it's their responsibility to provide the means of payment to people. So you're not going to legislate central banks out of the money game. And so I think they will, through modernization, they will eventually all adopt digital monies, and it won't prevent somebody from developing a stable coin or some other thing and trying to get people to use it. That's all fine. That's all well and good. I'm not saying there shouldn't be a healthy level of competition there, but just like, Canadian Tire money that you get when you shop at Canadian Tire. I guess you don't shop at Canadian Tire, but it's real money in Canadian Tire, but it's not real money anywhere else. So, okay, that works for me. But I still want to be able to tap the universal money. And so there is a function, a public good aspect to the provision of a means of payment that is reliable and is connected to a predictable monetary policy that can deal with not only excess demand, but excess supply, which is what I'm arguing that Bitcoin cannot do.
But the idea of a central bank digital currency raises a lot of red flags when it comes to privacy and government control, that if this is something that the People's Bank of China is championing first to the race with this one, that in itself should be disconcerting, that governments will be able to monitor every single transaction that anybody makes, and more importantly, that this could pave the way for some kind of social credit system, some kind of system where if governments don't like how somebody behaves, then they get taken out of the system. And we saw something similar in Canada with the way the anti-vaccine trucking protest was handled, and how Bitcoin and banking accounts were frozen in that regard. Are you concerned that this central bank digital currency idea puts too much power into the hands of government?
No. Why is it okay for my bank to know every transaction that I do, but not okay for the central bank to know
Because there are
that
several banks. Because if one
Yeah.
bank that chooses to not do business with you, you can go elsewhere, for example, and you still have cash.
Yes, well, there you are. So the central bank would, just as your bank would not reveal all of your private transactions to anyone unless forced by a court order, the central bank would obey exactly the same laws and would not reveal your personal data, the transactions you had done with your central bank digital currency, unless it was subjected to a court order. I don't really see a difference between those two
But
things.
it's more a concern of the government being able to stop somebody's participation in the system if they don't like their politics, as we saw with how the Canadian government handled the recent trucker protests who were protesting against the COVID-19 vaccine.
Well, I don't know much about how that actually was executed, but I for sure, to the extent it was executed not by the central bank, but it was executed by commercial banks. So that's a different legal question.
Under the decree of the government, my point is that it would make it even easier for the government to exercise that level of control.
Well, honestly, Michelle, I think you've kind of gone down a path there, and I just don't see it as the big bad government looking at our affairs. I'm sorry. Okay.
Final thought before I let you go. When I look up your book or anything to do with you, the next thing, well, recently that is, the algorithms of the digital age of which we've discussed suggest I may be interested in Ray Dalio and his principles. And his principles of dealing with a changing world order. So you pull up your book and it's like, if you like this, you may like this. Yeah. The same with a lot of the YouTube videos which you're featured in. Yeah. So I'm going to take that opportunity to get some of your thoughts on what Ray Dalio has to say. And his main argument in the principles for dealing with a changing world order, and by the way, it's a nice association to be in the same camp as Ray Dalio.
I agree.
His main argument is that the balance of power evolves in a cyclical way where dominant world powers emerge, rise, and then eventually decline and fall in favor of a new dominant power, which will go through the same cycle. And at its peak strength, the dominant power imposes its currency, which becomes the global reserve currency, and that this role is currently played by the US since most of the international trade and assets are denominated in US dollars. Again, a brief summary, but his main point is that the recent historical events indicate that the US dollar is currently in a phase of decline. Do you see that happening? Do you think that the US dollar could be replaced as the global reserve currency in the not too distant future?
Well, first, let me just say I'm delighted when I look on Amazon and they tell me, like what you saw there, that, well, if you're interested in this book, you might like Ray's book. I've known Ray for a long time and have always been a follower of his ideas. So I'm proud to be kind of thought of in the same breath. That's great. I think, as always, I believe he's on to something. And in the kind of, if you like, the seismic way, these are very slow moving forces. Of course, often market participants or economists want to pounce on these things, expect to happen immediately, like the transitory thing we talked about earlier. It isn't that kind of thing that he's talking about. So one of the things I would observe that kind of goes with that is that the share of global income going to workers as opposed to capitalists is at its lowest point in recorded history. That for sure has the sounds of, kind of an inflection point on your way. It really is very unlikely to continue to move in that direction. And so how would it look if that turned the corner? And where would the U.S. be in that? U.S. being one of the most, in the place where the income distribution has moved the most over the past decade towards the top, okay, and away from the bottom. So inequality being one of my forces, I do see this as the makings of a shift, and it takes on a political dimension, because anything that bothers people as much, being left behind and being left out, that becomes a political thing. It's what Donald Trump tapped into. That was that vein of discontent that was obviously clear, and it's present in lots of countries. And so some sort of major shift is coming. And if the US is one of the main areas where this is a problem, then I think we have the ingredients of something important, like Ray's talking about, possibly not cataclysmic, but more like an erosion. And if the world geopolitically is more multipolar, as Ian Bremmer says, G0, not G anything, just G0, then of course, again, you've got an important ingredient for that kind of drift. What emerges to replace it? That's when the reality becomes more difficult, because people are like, well, okay, so what might happen? You think through the scenarios, you begin rejecting them all for very good reasons. And so I'm not ready to make a forecast. I'm reading Ray's book. I'm not done it, to be honest, but it's fascinating. I just think that in the end, something's got to change. And so what form does that take? Some sort of eruption, an earthquake-like thing, or is it just something that kind of happens, you don't notice it until one day you notice it? Maybe the latter, but lately the volatility is such that it could be the former. It could be something more cataclysmic. Anyway, I think he's on to something. I won't say more than I'll let Ray do the forecasting. That's really long term.
Okay. Well, look, you have given our viewers a lot of advice and insights in this interview. So as a final question, Stephen, what is the best piece of advice that you have ever received?
That I've ever received? Well, that was keep your options open. And it sort of applies not just to life, but to your investing, to your work, all of those things. The more options you have, the better able you'll be able to deal with the risk that I see is on our way.
All right. Keep your options open. Well, I appreciate you choosing the option to spend this time with me here on Kitco News. So thank you again so much for your insights and your time. Stephen Poloz, really appreciate it. Thank you.
My pleasure. Thank you. Bye-bye.